Hi everybody, this is Osprey from MyChartCoach.com. Thanks for taking the time to view this video. We've got some good news out after hours with Netflix. As you can see here, they're soaring big after their third quarter earnings beat. It was a big beat. They beat the estimates by 21 cents. So yeah, as you can see here, the highlights, very good numbers. So it has Netflix running in after hours trading. So right now it's at 388 the last time I checked. And so at 388, that's going to put the share price up in this range right up here. And it's interesting that it's hitting this level because this is the gap level from back in July. If you look back here between July 16th and July 17th, there was a gap down open. There's still an unfilled gap at that level. Now a move up to about 392 would fill the gap. It traded above that level during after hours trading, but it pulled back below, and that's turning into resistance tonight. It's going to be all about breaking above that 392 level and turning it into support. If it can head above that level, then it's all about 400, the next big level. You can see there was a lot of resistance. It was a big support level here. It's going to be a big resistance level heading higher, and so it's going to be a tough one to break as well. Notice how 400's lining up with the descending resistance line. So it's going to be all about also staying above this 385 level. That is the bottom of the gap. If it trades below 385, it could drop down, and the downside risk is it comes down here to test this 100-day simple moving average at 365.60. That would be the next moving average support level below. Right now with the close down here at EMA 13, you're looking at a giant gap up open above all these moving averages. So either it's going to take off and keep running, above the moving averages, or it's going to pull back and test support. And so one thing to keep an eye out for tomorrow is keep an eye out for a black candle or a red hollow candle. Keep an eye out for Netflix trading below the open. After a big gap open, if it starts trading below the open, it will be a signal the bears are attacking and that it could pull back and consolidate. So that will be a clue. All right, so it's going to be all about breaking the top of that gap to head higher. Let's take a look at QQQ. Okay, yeah, we had, TQQQ is what we normally go with, and that was in play today. And we like to follow QQQ so you can get a look at the technology sector. Yeah, if you can see here, that drop below 30 on RSI, that was the buy signal. It's rare for QQQ to get below 30 on RSI, and so when it drops below that level, many times it's a buy signal. Also on Fasto, you can see that was right where it was lined up with the last time that it bounced. And so each time that it's hit this level below 20 on RSI and down here below 30 below 20 on Fasto, and then that's been a buy signal. And so when it lined up with RSI below 30, that was looking like a good technical bounce level. This is a chart that we've been working on, so there's annotations. It started with the double top here. That's what these annotations are from. And then I posted some charts on the bounce down here on the 200-day simple moving average, and then also off of this June-July support zone. And that turned out to be the good re-entry level. Notice how the candles were all holding this 170, 120. That's the red line, the 200-day simple moving average. That was the reload zone as long as support held. They tried to shake out here, but it got right back above. And then it had been working on the pink line. That's EMA 4 at 174.92. There was a close above both of those levels today, and then it was hitting the orange line above EMA's 4 and 8, and then it's hitting the orange line, which is EMA 13 at 177.69. You can see after hours trading, it's what, 178.53. So that puts it right here at the 100-day simple moving average. And so it's going to be all about trading basically above 178.50 to keep it easy. If it could stay above that level, that should signal it wants to head higher. And then you're looking for a run up to the middle Bollinger Band and the 50-day simple moving average. It's going to be all about turning, if it turns that 178.50 level, then it's all about 181 to 181.50. Getting above that 50-day simple moving average at 181.62 would be a really good sign for the technology sector, and that's where it could get moving and start heading higher. As you notice back here, the previous uptrend, that the candles were all bouncing off of the green line. That's the 50-day simple moving average. That level broke on this red candle right here, and that signaled the start of this downtrend. And so it needs to get back above that level to get a new uptrend going. Okay, so we'll keep an eye on QQQ here. A good sign is down here. Look at the volume. Check out the big volume. You got this lower wick here on this candle and a giant volume spike. People, big money loaded off the bottom, and then now everybody that loaded down here, they're looking pretty smart. And it's all up at 178. It's up $10 from where big money loaded. Always follow the volume bars. Okay, you can't. The big players, they like to hide their cards, but you can follow them through the volume. Okay, if you look at AMZN, okay, this is arguably I mean, you would say, most people would say, this is the #1 company in the world. And so what's going on now is we're having some sector rotation going on. I know a lot of people are disappointed in the marijuana sector today. Yeah, it had a big pullback, and one reason you got this shift, marijuana was pushing while the stock market was pulling back. It was holding up, but now that we have the stock market bouncing and moving higher, a lot of people sold those marijuana stocks, and now they're jumping back into stocks like FANG. So FANG had a really good day today. So now with Netflix doing well with earnings, we might see the FANG stocks start moving higher. They already started today. You have Amazon being the leader. You want to watch what Amazon's doing. It's up 3% today. Check out fast or RSI here at 42. When RSI got below 30, that was such a good buy signal, and I did put out some information on that, and that just turned out to be an awesome buy. So congrats to everybody that was following that. That's a simple one. If you get a chance to buy Amazon below 30 on RSI, that's a no-brainer. That's oversold. That's a rare occasion that might happen once or twice, maybe in a year if you're lucky. And so when that situation happens, you're getting a good entry point. The day that happened, when that was going on, you had the candles way down here. Look how the candle was forming below that lower Bollinger Band. The spinning top formed completely below the lower Bollinger Band. That's such a rare occurrence. When we trade the crappy small cap penny stocks, this would be considered a pretty good setup with the big volume bar here for a technical bounce. Let alone if it's Amazon, the #1 company in the world, it was definitely set up for the technical bounce here. Big players loaded, and so they're being rewarded now. And it closed today above EMA's 4 and 8. That was the move we were looking for. Notice how all these candles were below this pink line. That's EMA 4. It had been trying to break that level. Well, today there was a clear break above both levels, and then the 100-day simple moving average at 1829.43. That was the big level to break. It didn't break that intraday, but check out after hours. It's at 1848. That's also putting it above EMA 13. If it can stay above 1845, it has a good chance of running back up to the middle Bollinger Band in the 50-day simple moving average. That's up here in the 1900 to 1920 resistance zone. Once it gets back above that 50-day simple moving average, that's when Amazon's back and fully bullish, and the uptrend can continue. And so this could be the potential start. Today's trading day, this would be day one for the start of a potential rally into their earnings that'll be coming up. You never know. Anything could happen, and they could sell off tomorrow. But tomorrow it's looking like a gap up open, and yeah, just as always, keep an eye out for black candle. The black candle is this candle right here. Notice how this was in a downtrend, and then there was a gap up open, and it traded below the open, and then a red candle followed. You have the black candle here, and that was at a top, and then it started the downtrend. You had the black candle here that was followed by red candles. Sometimes you get the black candles in an uptrend, and it keeps pushing higher. But a lot of times when you see a black candle, it signals that it could possibly take a pause or maybe pull back. You have other examples here as well. And so, yeah, just something to keep in mind. Yeah, keep an eye out tomorrow for the black candle. Just throwing that out there with the gap up open. It's like everybody's glad to see the market bouncing and having such a good day and see technology running. But at the same time, you have to be careful because the stocks are in a downtrend right now. Most of these technology stocks are in a downtrend on the daily chart. So the bears are still in control. This is just a short cover rally. You don't have a new uptrend until the middle Bollinger Band turns back into support, and so so they have a lot of work to do. So just keep that in mind. And with the marijuana sector pulling back today, when some people were thinking it was going to keep running, that's definitely something to keep in mind. Okay, so we're going to look here at Tesla. Yeah, it closing up here at 6.5%. It's right here at 48. And the reason why I said that about the marijuana sector is because we were prepared and in our chat for potential sell the news. We had been talking a lot about it yesterday, just getting everybody ready for that. That could happen. It just happened sooner than we thought. It happened right at the open, as opposed to we were thinking maybe they'd let it run a little bit in the morning and then people would start selling off later in the day. But you never know when it's going to happen, and so or you know, you just have to follow the charts. So just putting that out there. Look at Tesla here. You've got it at 48 on RSI. It needs to get above that 48 level and get above the 50 level, and that would be bullish. Once it gets back above 50, that should signal that it wants to be, you know, that the bulls are back in control. If it can stay above that level, you have Fasto back above 20 here and heating up. So what happened with Tesla here is, you know, it had come down. There was a gap back here in September between these two candles, and so it came down here. You know, it filled with this candle right here, and then you could see it came down this candle. You know, these candles, or you know, this had filled it originally, and so there you had this gap level right here, these two green lines, and today there was a close back above that level, because gaps can become resistance levels even after they filled if you're trading below. And so breaking back above, it needs to stay above that 271 level. That's one key level to stay above. And then also you can see here it filled this gap in October. There was a gap between low of day on this candle and high of day on this candle, and so it's hitting the top of the gap resistance level. It's gonna have to break above that level tomorrow to head higher. The last time I checked, Tesla was flat, and after I was trading, it was trading around where it closed. And so it's going to be all about breaking that top of the gap level and then turning it into support. If it turns into temporary resistance and it can't get above this 276.60 level, that's going to signal more consolidation. How will you know it's not working out? If it drops below EMAs 4 and 8 and drops below that 266 level, that would be a red flag signaling downside risk. You do not want to be long holding Tesla if it's forming candles below EMA 4. As you can see over here, when it's below the pink line, it's not good. You know, below the pink line, not good. Above the pink line is good. You know, that is good. And so right now it's above the pink line, and it's trying to cruise higher above EMAs 4 and 8. The next key resistance level to break is going to be this middle Bollinger Band at 282.34. If it can close above that level, then it could get a new uptrend going. Keep in mind the middle Bollinger Band is always tough to break once you're below. If you look down here at the MACD, you can see it's pinched right now and really hooking up. The green line's the MACD line, the red line's the signal line. And if it crosses over, that could signal the start of the next run. You could see back here on the 17th, you know, that lines up here, right about here, and that was the start of a nice push higher. And so that's what you could have here. If it fails to cross over, that would be a red flag. If you look here at Tesla on this chart that we've been working on, you can see, you know, down here it had dropped below 30. On this pullback, yeah, it didn't get below 30 on RSI. You can see Fasto below 20. Once again, below 20, that was the bounce level. It bounced back off of this. Okay, so what's going on now? You do have a crossover here on ADX, so you have the green line crossing over the black line. It's a sign the bulls are heating up. It came down and retested the level from September. This chart was made back here on the September drop, and so you can see here it bounced off of this April support level back in September and ran back up, and then it came right back down to that level, and that's where it bounced off again this time, this 250 support zone. And so today it closed back above EMAs 4, 8, and 13, the pink, the pink lime and orange lines, and it came up here and it filled this gap as we were talking about before. Notice how the gap is lined up with the prior support level from back here in May and in September, and so that does become resistance. It's gonna have to break above that level. Notice the next big level is up here at 290. That was a big support level as well, and when you have a support level, that does become resistance. So if it gets above that 282.34 level, keep an eye on 290. That will be a big level to break. If it can get above that, that's when it could get up there to that 50-day simple moving average that we were talking about. And then if you look down here, we have the, you know, I use both the 12, 26, and 9 time frame for MACD and the 8, 13, and 5. The 18, 13, and 5, it signals a little bit sooner, and as you can see here, it's already crossed over. It already has a bearish bullish crossover, and so the 12, 26, and 9 is trying to follow along. You know, when you get a crossover, sometimes you get big runs like back here. You know, it crossed over, and that was the big push. This was a crossover, okay, and then right here on the chart, big push. And then you've got the, you know, crossover, and that was this rally right here. and then now you've got the same setup. So is this the start of the next push higher? The charts are signaling that's what the charts are saying, that Tesla SEC investigation is now closed, and so maybe this is what the bulls need to get that short squeeze going and continuing and making a run back up to $300. All right, thanks a lot for viewing this video. If you'd like to learn more about charts and technical analysis, please come check out the chat. All right, thank you.